Now, oil is trading around the $70 a barrel mark as investors assess the threat to U.S. production from a storm that's forecast to strike the Gulf Coast, as well as rising OPEC crude output. Now, Anadarko has evacuated workers and shut production at two Gulf of Mexico platforms as Tropical Storm Gordon approached the Louisiana and Mississippi coastline. It's due to make landfall tomorrow. Still with us, Peter Dixon from Commerzbank. Peter, when you look at the price of oil, now this, of course, goes back to emerging markets, whether, they're desirable or not, but it also goes back to your inflation forecasts. What's the main worry about oil? Is there a danger of underinvestment that leads to $100 per barrel?
Well, I think that the real problem with oil is geopolitics, because if the US gets its way, then Iran's going to be cut out of the market. And the question then is, well, does that push the price up, or do US shale producers step in to as it were, stabilise the market? So there's a lot of uncertainty out there. I mean, I would say that the market supply looks reasonably good. And as a consequence, I think there's downside for oil, which perhaps ought to mitigate the inflationary impacts in the Western world. So I'm not overly concerned at the moment, but of course oil, it kind of has a momentum of its own. It can go very, very quickly. So
what kind of forecast, or is it a range that you assume in your economic models?
I mean, I would say for Brent, we're looking at something by around about 70-ish by the end of the year, maybe slightly lower, but it's slightly below where it is today.
Okay, and what's the impact on, again, do you kind of sell off some of the developing markets that are also exposed to oil?
You wouldn't want to go, too short these markets. I mean, basically, at the moment, I think oil is, it's kind of playing a minor role in our thinking. I mean, because the span within which it's likely to trade is fairly low. Right. So I mean, I think you're really sort of bottom fishing if you try to trade on kind of a $5 move in the oil price. I
mean, there's been a little bit of, I guess, concern or question marks on whether OPEC would be able to fill the vacuum if production were taken offline. Do you think they'd be able to?
I think they'll struggle, to be honest. I mean, on the one hand, you could say, well, OPEC has been pretty good with regard to maintaining its discipline on quotas over the course of the last, 2 or 3 years. And I think as a consequence, if Iran is forced out of the market, then I don't know that the rest of OPEC will want to step up to the plate, because after all, it's in their interests for oil prices to go up. I also think that the likes of Russia, well, certainly Chinese buyers, will probably step in to buy up any of the Iranian oil which is forced out of the Western world. So I think on balance, the global market is looking reasonably sort of well supplied. I don't think there's any real danger of a supply glut or a demand shortfall at the moment.